The Morgan Report with David Morgan.
David Morgan, themorganreport.com for the week ending 11 June 2021. Well, first up is something that by now many of you probably are aware of because I know many of you look at the alternative news, but this is from the Sociable. It is regarding the World Economic Forum doing the Cyber Polygon 2021 to stage a simulation on a supply or cyber attack. And the reason that I think this is important for everybody to know, I don't want to overreact, but I think this is again important, is because the WEF will stage another cyber attack exercise as it continues to prep for potential cyber pandemic that founder Klaus Schwab says will be worse than the current global crisis. And you can watch the video. What I'd like to just draw your attention to, and most of you know basically what I'm going to say, is a lot of these simulations turn into the real thing. This is on July 9th. Whether or not that's going to take place, I don't know. What I do know is forewarned is forearmed. Be advised, July 9th, if you got overexposure in any of the electronic platforms, you might want to rethink it. You might want to park funds somewhere else momentarily just to be on the safe side. That's your call, not mine, but it's my job to make you aware of these type of things. So there you are. I definitely would read this whole article. I think it's worth the time. Moving on to gold, I would say that gold has definitely done a pretty good job here. It's, moved up over the 1900 level. It's fallen off. I think we're going to be in a trading range for a while. This is an article by from Kitco, Jim Wyckoff, and I pretty much agree with what he has to say here. It looks like it's going to have a high-level consolidation. Silver is still trying to break the $28 level. It needs to do that. It needs to stay there for a fair amount of time and move forward from that point. Once it gets above 30, it's pretty smooth sailing. There's some overhead resistance in the low 30s, and it may take time to work through that. But once that's accomplished, then silver really doesn't have much overhead resistance. So time will tell. We've been biding our time as the Wall Street silver crowd continues to gain momentum. I think there's over 100,000 people on the Wall Street silver site right now. And as most of you know, John Adams is independent. He works, he's Australian. He actually is associated with As Good as Gold Australia. And he's taught a lot of people about the difference between unallocated and allocated. And he's had a few choice words to say about Perth Mint. And this is a rebuttal basically from the Perth Mint. It's the second one. And basically rumors have circulated on the internet that there's a physical shortage of silver and gold. And of course, the Perth Mint says you can go to the website and there's a bulletin that there's absolutely denies these allegations. This is from Kevin Rich, consultant to the Perth Mint, told David Lynn, anchor of Kitco News. Retail demand for physical silver has been strong this year, but the Perth Mint claims demands have completely outpaced supply. Denies that claims that demand has completely outpaced supply. So, in other words, they've got it there. Don't worry about it. Everything's fine. Nothing to see here. While the Perth Mint is currently experiencing increased demand for its product and services, customers can still invest in leading Australian silver bullion coins in pool, allocated, or unallocated silver at our depository. One quick note, and you can believe me or not, I have to keep the source anonymous, so that already puts up red flags for you, but I did get an email from one of our members that had product at the Perth Mint and had much difficulty to put it in polite terms. So there's always two sides to every story. I want to be fair. On a fractional reserve system, as long as everybody that comes to the window and takes delivery is satisfied, there's no problem. It's just that last person in line, or the fifth person in line that says, hey, I want my gold, I want my silver, here's my certificate, hand it over the window, and it's not there. That's when the problems begin. So as long as everything is met at the margin, or people settle in cash or whatever, or talked out of moving from unallocated to allocated or whatever the case may be, as long as that's all satisfied. Now, just because I have one very strong data point from somebody that I know proves that there's a problem in that case, but you don't want to take one data point and extrapolate it to the entire system or the entire, Perth Mint, and I won't do that. But I think the story isn't over, so I'll leave it at that. And staying with Kitco news this time, gold's path to 2,000 becoming difficult. And that's kind of what I just said at the opening, is that I think we're going to see a high-level consolidation here. And yes, we're going to see $2,000 gold this year, probably will, but it's going to take some work. What is the summer going to be? It's hard to say with all this inflation, deflation talk. Once the forbearance is done and there's cutoffs on the, I'll call it free money that's been handed out, then we could see a change or some repercussions to that, which may be temporarily deflationary, or at least perceived that way. So lots of ups and downs in the economy going forward. And I'll go ahead and finish up this week with this article. Bond King Jeff Gundlach, from Market Insider, cautioned about rising debt, reiterated his bearish dollar outlook, and praised European stocks at a webcast. Here are his 10 best quotes. I'm just going to pick a few of these. Gundlach, the dollar is going down. That's the linchpin to everything. I think I've said that a few times, I believe. And so that's the thing that's most important. And I'll finish with this second one here. Ultimately, I think gold will go much higher as the dollar falls and commodities broadly have a further significant leg to the rally that began 15 months ago. All right, next up from Market Insider again, Reddit traders have scared away many short sellers following massive squeezes in meme stocks, new data suggests. This talks about what's been going on with the GameStop and the AMC and everything else. I won't read it to you, but I think you get the idea. And, of course, the headline tells you everything that some of these short sellers are thinking again before they go up against some of these people at Reddit. Now, as most of you know, the Reddit folks, the Wall Street Bets, was a gentleman, goes by Happy Hawaiian, that wrote a missive quite detailed about silver, and basically kind of got kicked off of the Wall Street Bets and a new group formed called Wall Street Silver. And that group is up to 100,000 already. So it's a whole new Reddit group that's pro-silver, and it's quite interesting. So here we are on the Wall Street Silver thread, I'll call it, from Reddit. And you can see that a lot of these people are extremely creative with some of these videos. A lot of it you'll see people showing what their stacks or their recent purchases are. Some of these are actually, in my opinion, worth kind of scrolling through and taking a look. You don't have to, but there's some good information here. And there are different aspects to this, as you can see over here on the right-hand side. The data discussion, some videos, news, discussion, due diligence, etc. So if you're interested, there's stuff here. And, of course, you want to join the group, you can. And I'll leave it at that. I just do usually take a few minutes every day just to come in and take a quick look at what's going on here. Furthermore, they do have a newsletter, and I signed up for that. You can, I think, join here if I remember correctly, and it'll pop up something for their newsletter. I guess I muffed that. But anyway, something to check out, and I'm going to leave it there for this week. I'll be back with you next week with another weekly perspective. This is David Morgan, themorganreport.com.